So we had, as Darren mentioned, a panelist of liquidity providers in secondary market that were meant to go in a row, and just scheduling rearranged that. But so we're going to jump kind of on top of the OTC discussion a little bit, and my panelists from NYSE, New York Stock Exchange here, will answer some interesting questions. My name is Jordan Fishfeld. I'm the managing director of CFX Markets, the founder and former CEO of Pure Realty, which was a real estate crowdfunding platform, and the treasurer of the CFPA. I've been involved in the crowdfunding space for a long time. Really believe in the thesis of democratizing investment opportunities and access to capital. Paul is the managing director of NYSE in the small cap space. Went to, can I go through high school?
Sure.
Yeah, so a New Yorker by blood, trade, school, education, and career, right? So an NYU MBA with undergrad in Binghamton, and now over at NYSE. And so we're going to talk a little bit about liquidity, how they view the secondary market in this space, and some of the opportunities and challenges coming. So my first question, as always, is what can we do to kind of save the world within the finance space?
Well, you want to innovate, of course, and you want to regulate. This is like animal spirits, right? We think that is the cornerstone to capital markets, capital formations. You need entrepreneurs. Without them, none of the things matter. I wish I was one. I work at a big company, but I try to be entrepreneurial at the New York Stock Exchange. So, what was that?
No, it's just.
Anyway, yeah. So that's So we play our role. The NYSE plays its role in capitalism and capital formation, and it's not, especially for me, it's not just about big cap stocks, which a lot of people think of when they think of the NYSE. 100 billion, right? It's like our median company is about 10 to 15 billion. But the companies I work with, the small cap, really, really small cap, not like under 500 million small cap, but 5 million small cap. And those companies can be and are listed within the NYSE family. We have two platforms, real quick. The NYSE, right, big cap guys, and then we have a platform called NYSE MKT, and that's for our growth companies. Nice euphemism for small companies, but as a whole, they tend to grow a little faster. So we've got two platforms, and we're trying to do more and more work with the entrepreneurial set, with the growth companies. And you don't have to be that big, which may surprise you. You could be, quite small, and we can go into the numbers, and be part of the NYSE and be able to be a public company.
Yeah, and so we will go into the numbers in a little bit, and so kind of piggybacking off that though, when the Jobs Act passed, and for a lot of us who have been in this industry for a long time, it's really exciting when we see the larger, institutional market players coming into our conferences and into the space, recognizing and seeing the opportunity there. And so, what specifically is the opportunity that you see, with the Jobs Act, and kind of to drill down more, is it an opportunity in its entirety, or is it more focused on one of the titles?
It's definitely Reggae, right? I know it's crowdfunding, and that Reggae is right.
Yeah.
Is crowdfunding, right? But for a little bit bigger, for the most part. It's get a lot of people and get retail type investors, and you have an idea and a small company, pre-revenue in many cases, in most cases, and that's where our focus is. So it's two things. I think the nice thing in terms of why the NYSE getting into this world of crowdfunding and Reg A is that if you're an entrepreneur, you don't just raise a little money, do your credit card, friends and families, and then do your crowdfunding and things like Reg A, and necessarily stop there. The nice thing is, right, I think as everyone's aspirational, these entrepreneurs, they just want to keep going. And so the neat thing and the role we play in other exchanges and OTC markets is say, hey, keep going. If you've got a great business and revenue is growing and you can hire more people and you can raise more money, you can go and you'll get the sophistication and you'll build the infrastructure, and you could ultimately be, a public company, a reporting company, a listed company, if you will, in and on the NYSE. So just keep going. And so we're kind of capturing the successful entrepreneurs that want to keep going And we're talking to, right now, largely for our NYSE MKT platform, our small cap platform, to these Reg A issuers. They've got these 1A filings going, and they're going through the process, and we're talking to them about, hey, raise your money, but you not just raise your 8 million, your 10 million, your 15 million, or up to 50, as we know. Do that and list while you're at it. You're already going through basically the equivalent of a registration for the most part. And just, heck, you'll be on a national exchange. You'll be like the toast of the town. You'll come ring the opening bell. It'll be like an amazing story.
That definitely is. And to drill down more there, so what I heard, and I want to clarify for the group here, the Reggae component of your excitement, I guess, is it related to size, or is it related to the regulatory environment in which it exists? And for me, I think it's the latter, right? I think the fact that you're going through a part of that public filing is why NYSE is a little bit more excited about Reg A as opposed to, let's say, Reg D, where I know Reg D offerings have hit $150, $250 million, but is that something that you're looking at? Is it size or Reg?
Right.
Yeah.
What was the question?
Does size matter, right? That was funny.
I'm going to let that one go. We're being recorded. It does for us.
Right. Okay.
So, we'll have a company that will say, hey, we're doing a Reg A deal, right? We've got everyone in place. We've got the lawyer, we've got the banker, we've got the portal. We're qualified, right? And really cool. And then we'll say, awesome. But just remember, you can close your deal, you can have a great life and have a great company. But if you also want to list, size matters, right? You have to be a listed company on our NYSE MKT platform. And none of these companies, a lot of these companies are not profitable, right? That's one of our listing standards. So if you're not profitable, which is very not uncommon, which is almost ubiquitous, if you're not that way and you're pre-revenue, but yet nevertheless you still do a Reg A deal and you close it, in order to become a listed company on our NYSE MKT platform, you have to have basically $15 million in the market value of your public float. So is that huge? Is that small? I know someone was talking earlier about perspective. But look, you're on a national exchange and you're going to be trading on the floor of the New York Stock Exchange. So that's where size does matter. And if a company does a Reg A deal, they close it and they don't meet those standards, it's okay. Even though your goal was to list, right, as part of the closing, and post-closing is to list your shares. If you can't do it, it's not the end of the world. You'll have OTC markets to trade on. And after that point, you'll be a company that just perhaps would uplist like any other OTC listed company. So yes, size does matter, but we're really excited. We're more entrepreneurial than you might think at the NYSE, and we are really pumped because more entrepreneurs are going to now have a new way to raise money, new ways to raise money. If you've got a real great idea and a business and infrastructure, that could translate, at least for us, into new listings and new clients, new customers.
Great. So continuing with that idea and that NYSE is an entrepreneurial company, an innovative company, I would love to hear, what innovations do you see coming that present, market opportunities and present kind of existential threat? And we can go, we probably won't dive deep into blockchain or Bitcoin or anything like that. But what are the innovations that we're seeing? Obviously the biggest one being online capital raising, but anything else kind of within the market that we should all know about in capital financing and space.
Some of you guys will know before I do. We're an SRO. So we love innovation. We try to innovate ourselves. The vast majority of our team at the NYSE are tech guys and gals, right? Because we, at the heart of it, we're this matching engine, this very complex, I can't even begin to describe, system that allows, millions of investors and thousands of companies, right, to send myriad order types. It's not just buy me 100 shares of IBM at the market. It's a 1,000,000 character code algorithm, million character algorithm. That is an order today. Do the following things with 1 billion embedded if-thens just to buy or sell some stock. So we've got to get all these participants, right? All these different securities, and then you don't just trade on the NYSE. Even if you're a listed company, you can trade everywhere. NASDAQ, over-the-counter internalized dark pools. everything somehow has to work. I know this is going on a little bit off, but
No.
talk about technology, right? I mean, and it works. Every now and then it becomes, you'll see something in the journal, right? Oh, there was an outage here, outage there. Amazing how infrequent it happens. I can't even begin to explain how complex that system is, right?
Yeah.
I mean, and then trades occur. Billions of shares a day, at the right price, inexpensive, anonymous, fast. I mean, if that's not a technology, success story, so we're constantly trying to stay on the cutting edge.
Okay.
Because even if you're a listed company, you don't have to send your order to the NYSE. The computers know where to send it. It can go in a myriad different places. So we have to stay on the cutting edge, cheap, fast, anonymous, and that's technology. But that's where a lot of our energy is spent in terms of world technology.
Perfect. And so going, kind of shifting focus a little bit, recognizing that you guys are have an eye on this market and the small cap space.
Yeah.
As companies move through your ecosystem and really enter your ecosystem, do you see any pushback from brokers, bankers, listing sites when the original capital was crowdfunded or when the original capital was raised online? And I think that's a worry that a lot of the market has experienced is, what happens if I come to a listing platform and I have 150 members on my cap table? How is that going to affect my listing? So is that something that you see pushback from your point of view, from the banker's point of view?
Yeah, not yet. I mean, like for Reg A, right, a little bigger version of crowdfunding. Again, you have to get us interested, you've got to start approaching these minimum requirements, right? And you need 400 holders. Right? You need to have the $15 million in market value public float, like I said. You need to have a balance sheet with cash, right? You have to rate whether it's a Reg A IPO, straight IPO, uplisting. You have to have that, and so it gets into another world where there's not much real competition, with those brokers. I mean, there's competition in trading of these securities once they're listed, right? That's sort of a different subject, but. I think all of those members of the small cap ecosystem love it when we become part of the conversation, especially the entrepreneurs.
Right.
And the early investors, the investors, the entrepreneurs, and the bankers, because now they're going to do a deal. It's going to be a listed company, expand the ownership base, easier to raise money, right? Once you're listed, some of the restrictions go away, and we try to make ourselves as accessible as possible. Again, SEC oversights us. We can't just say, he's a nice guy, he's close enough. Almost has 4 million in shareholder equity, and he's got 350 shareholders. It's close to 400. That's good enough. Can't. Black and white rules. They're not recommendations, suggestions, themes. Hard and fast. But we're talking to a good number of private companies looking to do a Reg A deal, with the intention, of course, to list. And so that is really cool.
Yeah.
I know Elio's is out on OTC. That's terrific. We want to have the first national exchange listed company. And so things are happening. Things are getting close with somebody. Being Reg A, it's a public, it's publicly known. There's a firm called Myomo out there, out of Cambridge, doing some really cool things with exoskeletons and support devices for people who've lost strength in their upper extremities. And so, that may end up succeeding with the Reg A deal. We certainly hope so. We like those guys.
Yeah, and to my last question, then we'll open up to the audience. Given that we're a trade organization and spend a lot of our time, especially now with the merger with CFPA, recommending opportunities and changes to Congress and the SEC, what regulatory changes and rule changes or SRO changes do you wish for and or believe are necessary in order for the industry to move forward?
So Reg A is still really new to us, and we've yet to have a listing, and we've yet to have like a company do one, get on a national exchange, and then thrive as a real company. So it's like, we're good. Let's do this, and then we'll do the Wall Street thing of, just multiply it out, and we'd be happy, and I'm sure competition will be happy to list those companies too. So we like where we are. Let's see how these kinds of companies succeed. I don't know, things around baby shelf rules, where if you're under little different here. Under 75 million market value float, you can only issue a third through an S3. A third of that valuation is something that could be more useful for, again, small cap companies. Things around reverse mergers, not exactly the theme here today, but also, again, entrepreneurs, micro cap companies. If you do a reverse merger and you want to uplist to a national exchange, also NASDAQ, absent certain seasoning, which means waiting like for an eternity for the calendar flip, you need to do a $40 million underwritten public offering to uplist immediately after your reverse merger. So $40 million underwritten public offering for a micro cap stock doesn't happen. Almost never happens. I mean, it does, rarely. So huge number, 40 million to uplist for these companies with market caps of 30, right? They're not going to do those, so that's crazy. It should be 20, I don't know. Sound like Donald Trump just throwing out random numbers, words and things. Should be 20, yeah, make it 20. 25, I don't know. 40 is like huge for these companies. So it's not any riskier to underwrite and list and go through NYSE Reg 20. We do the same review. So if that was better, you'd have more companies doing those deals as opposed to 40. You can do 20, you can do 40. So those kind of things.
Perfect. So for me, that's a great introspective into NYSE and kind of what we're doing. Would love to answer any questions about liquidity, secondary market opportunities, cap table management, Reggae stuff. See what we have. So I think that's John going to ask a question.
Yes, John Burlock, Competitive Enterprise Institute.
It's like the person's always right behind the pole.
Okay.
Oh, there he is.
Thank you. I think it's great that NYSE Market is making itself available for Reggae to host Reggae, and it's not as radical as it sounds because the average IPO through the 90s was around 50 million. That's what Cisco Systems and Starbucks were when they went public, and they've grown into these powerhouses. My question is, I think I got it from your presentation, but are there any additional requirements to what the Jobs Act requires for Reggae Plus, other than the public float of 15 million and that the company be profitable, or?
Right, so I have a little nice, wonderful little handy dandy card which I'll give you, which has our listing standards. There are 4 standards. I won't go through them, but if you're profitable, you only need $3 million market value public float. We don't see that too often, right? These are micro cap small companies. But absent that, you need the 15 million market value public float, 400 holders, shareholder equity of at least 4 million, and we can talk about that. And a $3 stock price.
And can we make that sheet available through our system, or is that something that needs to be?
No, totally.
Okay, great. So
I have a whole bunch of cards here, but I'll also give it to you so it can be sent out. Anyone can see it.
That'll be great for our users online and in the online world. Do we have any other questions? I thought I saw one over here.
Oh, she's good. She's had a long.
Yeah. How are we going to help the world? I tried to ask that first.
Yeah, I'll ask the same impact question. But I was also going to talk about diversified capital, and if you feel you have a role to play in that space of diversifying capital from a gender and minority perspective.
What was the
The end of the question. So
Sorry for in this because in the new exchange you're talking about, right?
Yeah, the NYSE MKT platform. Yeah.
Yeah, I mean, like, is there any particular outreach efforts for minorities or women?
Okay. Diversity capital.
I mean, well, we have a set of rules. Everyone has to have it, whoever the applicant is, background, anything, So it's open to every entrepreneur, right? But there are no exemptions, carve-outs for minority-type situations. They're totally colorblind rules. 4 million of equity, 400 holders, market value. You got it. Doors are wide open for everybody.
And I do think that's where crowdfunding comes in general, is really opening up that access to capital, and it's something as an industry that we're looking to improve and continue to improve, diversifying the founders and the capital sources. So, and then you had another one, or?
Good question.
Okay.
I don't know what that
I got
is.
that.
Oh, yeah.
Perfect. Thank you so much. Any other questions? I know we have another liquidity panel.
Company is just a flat-out startup. What stage would they have to get to before they could
You
talk to you?
have to be operational. In other words, unless you're a SPAC, right? People probably know what that is on their alternative
Right.
world. SPAC is a pile of cash that lists. They list under these SPAC rules. We know it's a SPAC. Their job, they have an obligation to put the money in trust and do a deal or give the money back. It's safe. If you're not one of those, you have to be operational. You can't say, we've got a great idea, we've got we've got a drug we're thinking about, or
Suppose you
something
got-
in Marcellus Shale we're going to drill.
Suppose you got 400,
You have to be
400
operational.
shareholders, and you got money from Uncle Charlie, and you've got the amount of money that you need, and you got a bunch of shareholders now, and you've got the equity. You don't really have to, do you have to be profitable?
No. Even it's all public, the vast majority of our new listings are not profitable. Many pre-revenue, think pharma, right? Going through clinical trials. Raise money, burn it, raise it, burn it, and solve a great problem, ideally.
And then make money for.
And then make
Hopefully. Okay, perfect. Thank you so much. We'll have our next panelist come. I appreciate it. That's
Thanks,
great.
Jordan.